Story this evening, private sector's contribution to investments made for the creation of new assets has dipped to its lowest level in 11 years. Now, data from FY24 shows government's share of the pie has been inching higher, while the household sector's share has been broadly stable. Now, Sapna is here with us. Sapna.
That's right. So if you look at the latest numbers that have been brought out by the Ministry of Statistics, it tells a very different kind of a story in terms of the private sector investments, and that's basically captured by the gross fixed capital formation, which in other words means their investments for capital creation. Having said that, FY24 was around 32.4%, their share in the overall capital formation, and this was probably an 11-year low, or rather it is an 11-year low as far as the data indicates. Way back in FY16, this has shot up to its peak of around 40-odd%, slightly over 40-odd%, and in comparison to FY13, the level was around 34%, it was slightly higher than that. So net 11-year low in terms of the contribution to gross fixed capital formation by the private sector. That's one. Second, as you have rightly pointed out, yes, investments by the government, both centre and the state governments, as well as the public sector units, that has really gone up, so to speak. They've kind of tried to fill up this gap. So if you look at FY24, both combined together, their contribution to gross fixed capital formation is actually over 25%. Let's break it up very quickly. Government share is around over 13-odd%, FY24. That's also over 2 percentage points up in comparison to FY23. Plus, if you compare to FY13, that's a remarkable improvement. Basically, that was around over 10-odd% way back in FY13. Now we're looking at a number which is easily over 13%. Similarly, in terms of the public sector units, around 11.8% is what they clocked in terms of their contribution to gross fixed capital formation. FY24, it is also higher year on year, that is FY23 in comparison. Plus, if you look at FY13, yes, again an improvement, that was around 10.2% at that point in time. Similarly, now if you come to the household sector, here again, that has basically stood the test of time, so to say, though of course it shows a tapering in terms of the contribution. So FY24, the level is lower than what it was in FY23 by around, I think, 1-odd percentage point. Plus, if you look at it in comparison to FY13 also, that level was around 43.7% in terms of their contribution to, investments that basically create assets. So it has tapered somewhat, but still it has stood the test of time. It continues to be the largest contributor to gross fixed capital formation, 41% consistent share in terms of the overall pie, at least in the last few odd years. So basically, to sum up, we can say that the private sector investments, they seem to be indicating that they're kind of retreating to a decade low. That's one. Second, public sector and government, both state and centre, have stepped in. Last but not the least, the household sector is very much there at over 41% contribution in terms of the capital formation. However, its share is also kind of tapering.
Right. Thank you, Sapna, for that update. Moving on.